want to talk interest rates, CDs, high yield savings accounts, and your emergency fund. It'll be fun. Come along with me. Okay, so we've been receiving a lot of inquiries from our clients about CDs. And usually the conversation goes something like this. Hey Seth, I'm hearing all over the news that interest rates are way up, and yet I checked my bank savings account and its interest rate isn't up. It's at like 0.2. So should I be investing in CDs for my savings instead? Maybe that's a question you've asked yourself, so I kind of want to cover that and some of the ins and outs and maybe an alternative that you'd consider as opposed to a CD. First, let's do a little background context. Okay, right now we are in a period of historic interest rate increases. Not going to bore you with all the economics, but here, let's get the basics. After COVID, there was a lot of financial stimulus, kind of propped up the economy. It also led to a lot of inflation, which I'm sure you've noticed at the gas pump, at the grocery store. Okay? In order to bring that inflation back down, the Federal Reserve, sometimes called the Fed, has raised interest rates. That kind of just slows things down in the economy. Now, interest rates, as you know, it's the cost of borrowing money. Usually when we think about this from the perspective of the borrower, if I want to borrow for a mortgage to buy a home, or an auto loan to buy a car, for whatever, I want to know how much interest do I have to pay. So you hear on the news they're raising interest rates and you're like, shucks, now I got to pay more interest. But you also want to think about that from the perspective of a lender. You are a lender, whether you realize it or not. Pull up your bank app and look at those balances. The bank has those funds even though it belongs to you. You are lending your money to the bank, right? And you should receive a rate of interest as a result of that. Okay, so the question that we get from our clients is why am I not earning more interest on these funds that the bank is holding? So you kind of need to draw a distinction between the different types of savings accounts. And really you want to be thinking about this within the context of your emergency fund. We have other videos about the emergency fund, when to set it up, how much to fund it with, where to save it. But the gist is you typically want to have 3 to 6 months of your monthly expenditures in your emergency fund. And you want to have that in an FDIC insured, meaning a safe account that is liquid or accessible at a moment's notice if you have an emergency. But there are different types of savings accounts or investment vehicles that meet both of those, liquid and FDIC insured. But the point is people are looking at their savings account, their bank, and the interest rate really hasn't increased and they're not yielding much. And hence they turn to CDs. So let's talk CDs. What is a CD? Okay, so a CD or a certificate of deposit, it's basically, think about it, it's a loan, right? You are lending your money to the bank, okay? So a CD is what's called a time deposit. It's unlike a savings account where you can freely deposit or withdraw. There's actually a set period of time associated with a CD. So you lend your funds to the bank and you get this CD and you're kind of on the hook to leave your funds there for that set period of time that's unique to each CD. You can choose different lengths of time. In return, the bank promises you a certain rate of interest. And when that time period is up, you get your cash back along with any interest that's accrued over that time period. So that's a CD. They're like savings accounts in that they are FDIC insured. So if that particular bank should go under for whatever reason, the FDIC steps in, insures you up to that FDIC coverage limit. And here's where CDs can differ from your traditional savings account at the bank. CDs are going to be yielding at the market rate, meaning whatever is going on out there in the interest rate world, good, bad, or ugly, the CD, a new issue CD, it's going to reflect that, right? So what if interest rates are up and you can take out a new CD and it's going to reflect that and you're going to earn, whatever interest you're entitled to. Whereas sometimes on savings accounts, traditional savings accounts that is, they may lag behind, they may yield substantially lower interest rates than CDs. And so here's where we get this question of, man, I'm noticing I'm not earning any interest. Should I turn to CDs? I want you to take careful note of one of the key differences between the two savings accounts and a CD. The CD is a time deposit. You need to plan on leaving those funds with that bank until the maturity of the CD, which kind of defeats the point of emergency funds that need to be accessible. accessible. Okay, so that is that's a potential deal breaker for your emergency fund. But to put those funds in a CD, that's kind of unfortunate. Now, if you've got funds over and above the emergency fund, you want to put in a CD, get a high interest rate, that's great. But luckily, there is another alternative, the high yield savings account. I can't tell you how many people I've come across that are unaware that there is such a thing that exists called a high yield savings account. And think about it like this. Basically what they've done is they've taken all of the pros of the traditional savings account and the pros of the CD, and they've mixed them together in this great mixture called a high yield savings account. Okay, high yield savings account is like a traditional savings account. You can freely deposit and withdraw at will, so it's liquid, accessible. Like both a CD and a traditional savings account, it is, or it should be, FDIC insured. That's something you verify before you set one of these up. Like a CD, it yields a higher interest rate, which is going to be closer to the prevailing, market interest rate, which is great. So you get the flexibility of a traditional savings account, and you get the interest rate, the yield of a CD. If it's too good to be true, usually it is. Now, what do you have to give up? Usually in a high yield savings account, the interest rate trails behind CDs by a little bit. If a CD is doing 5%, you may get 4.5% in the high yield savings account. But if you look in specifically at your emergency fund, and you're thinking, I need it to be safe and I need it to be accessible, the high yield savings account tends to be a good mixture of both of those characteristics from the different accounts. So maybe you're looking at the high yield savings account and going, that sounds good, Seth, but I also like the higher interest rate of the CD. Okay, so I think there's some room for some compromise there, right? If you think about your emergency savings in, call it buckets, right? My immediate short-term emergency savings, if I need funds, I can get to them right now. Maybe you want to prioritize that, liquid characteristic of account, either a traditional savings account or the high yield savings account. For the longer term, maybe the 4, 5, and 6 month of the 3 to 6 months emergency fund. Maybe you go, hey, well, if I had an emergency, I'd have several months before I would need those funds anyway. Maybe you can, get some CDs of those type of maturities and get a higher yield on those. All told, it's kind of this balance between getting as much yield from your interest rate, but also the convenience of the deposits, the withdrawals, the liquidity of the savings account. Now, if you Google high yield savings account, you may scroll through the list of all of them that are out there and you may not see your preferred bank. If you call your bank, say, I'd like to open up a high yield savings account, you may be surprised to learn that your bank doesn't actually offer that account type. This is maybe a reason why this is an account type that's kind of a lesser known, lesser understood account type. Not all banks offer them. In fact, many of the banks that do offer them maybe are just online banks that don't have physical locations. Now, that's not always the case, but that's kind of one of the common criticisms of a high yield savings account is you go like, well, I've never heard of this bank. I've never heard of that bank. Who are these? Who is it? Again, the key there is if you're opening a high yield savings account, you want to make sure it's a member of the FDIC, so FDIC insured. And that's really the main component. Beyond that, it's just the convenience of, are you comfortable banking online, or do you have to have in-person, bank branch to do your banking at? But beyond that, you're just comparing, traditional savings account, low yield, but it is liquid. CD, high yield, but it's illiquid. High yield savings account is intended to kind of bridge that gap.